Thanks very much for coming in. So we do have the Fed meeting here. We don't expect them to do anything on rates, but what might they do? What let me hear from them on efforts to boost growth?
Well, we think that they're still on a wait and see. As they announced it towards the late part of the summer, they want to see the next set of economic data confirm whether we are in some sort of a stability, or in fact, if we see any signs of deterioration, to proceed towards further quantitative easing. I think it's a little bit too early to tell, and they may have to wait until another meeting, probably on the 3rd of November, to see if they are going to take any more action down that route.
So they're going to wait and see how the data shapes up in the coming months. Well, how is all that going to affect the dollar, that wait-and-see approach?
Well, we think that the dollar will continue to weaken on the back of the economic data, on the back of the political uncertainty taking place in the U.S. And in terms of the economic differentials with the rest of the world, it seems to be lagging behind Europe. It seems to be lagging behind the other parts of the world, whether it's Asia or the emerging markets in general. And the U.S. dollar would be expected to weaken against the majors, except the Japanese yen.
Okay. Now, you mentioned political instability there. Presumably you are referring to the midterm elections that are just 2 months away. We got a big fight shaping up between the Republicans and the Democrats over how to boost growth in the economy. How might we see that political instability dent confidence in the U.S. economy?
I think the political instability is not only in terms of the Republicans and the Democrats. We also had some instability or some confusion within the Democratic Party earlier on in the summer with Mr. Ortsak resigning. So there has been generally a little bit of an uncertainty on the political side that has tended to be weakening in terms of the dollar. The effects have been to weaken the dollar. And we think that's unlikely to clear anytime soon. There's more likely to be a stalemate in terms of policy making rather than any clear direction. So from a fiscal point of view, we think that the U.S. is a little bit behind the curve.
I'm just going to ask you to wade in here on the controversy over these Bush tax cuts and whether or not the Obama administration should extend them. You had Martin Feldstein of Harvard University actually saying that Obama should allow these cuts for the wealthy people, shouldn't allow the tax cuts for wealthy people to lapse for at least another couple of years.
Well, we sort of have a slightly more prudent approach. There's a significant debate going on between the Europeans and the U.S. and Mr. Trichet and Ms. Merkel, Mr. Cameron on this
side
a little bit more.
Austerity.
Yes, yeah. and we're more on the sort of more austerity, preserve the deficit or manage the deficits now rather than moving towards growth. Clearly, the U.S. has the added advantage that it has the U.S. dollar as its currency, the global numeraire. So it is in a comfortable position where it can be fiscally a little bit more lax without having a quote-unquote run on its
currency. Just very quickly, Thanos, tell us about the euro. You do expect it to rise, but we have this situation in Greece and Ireland. How concerned are you about Europe's sovereign debt crisis?
Sure. Very, very, very important question. And we have seen the euro appreciate from the low 120s to the low 130s today. Part of that is because it was cheap from a purchasing power parity point of view. Fair value is around 135. So we do expect it to appreciate, not significantly, just marginally towards the mid to high 130s. We also expect sterling to appreciate. So yes, there are some political uncertainties still, but I think what we've seen over the last few months is the commitment from EU policymakers to ensure that this project will remain intact.
Thanos Papasavvas from Investec, thanks so much for joining us.
Thank you.